Hi there, this is CMA Nishanth Reghunath welcoming you to a new video lecture under my study for income tax. In this video, we'll be checking out the second part of our study for the topic of residential status, scope of income, and incidence of tax. So in part 1 of the study for residential status, scope of income and incidence of tax, we saw the absolute basics and fundamentals as to what makes an income taxable in our country, right? We saw the basics of various rules, and after that we moved on to the residential rule, and under residential rule we saw how to determine the residential status of an individual. So just like that, we have certain methodologies for finding residential status of the other categories of SSEs. Categories like HUF, companies, AOPs, BOI, LLP, firms, etc. etc. So as I said, the contents of this study is going to be the process of determination of residential status of an HUF, the process of determination of residential status of a firm, LLP, AOP, BOI, and local authority, which happens to be the same process. That is for all these 5 categories of SSEs: firm, LLP, AOP, BOI, and local authority. The process of determination of their residential status is one and the same. And finally, the determination of the residential status of a company. Also, one more thing which I left out to add, and that is the process of determination of the residential status of any other person. That is a person whose residential status determination which we are not covering out of the lessons that we are learning from points number 1 to 3 and that of individual. So yes, shall we head to the study? Starting off with the residential status determination of an HUF. It's pretty simple, it's pretty basic. I'm pretty sure that you all remember from the intro video for residential status I told you, it's only the categories of individuals and HUF who has resident, non-resident, and a further bifurcation of resident into ROR and RNOR. Rest of the categories of SCs just has the basic classification of being a resident or a non-resident. Okay. So how do you find out the residential status of an HUF? The deciding criteria is nothing but the control and management of that HUF. And it's on the basis of control and management that we decide whether an HUF is a resident or not. So if the control and management of an HUF, also please do keep in mind I'll be giving you a separate lesson on what control and management is right after this chart. Okay, so it's coming back. So if the control and management of the HUF is wholly or partly from India, that is at least a part of the HUF's control and management should be from India. If that's the case, then that HUF is said to be a resident. If the control and management is wholly outside of India, that is not even a small part of their control and management happens to be in India, then the HUF will be treated as a non-resident. So do keep in mind, as far as control and management is concerned, just a part is enough. Just a part is enough for an HUF to be a resident. Now I told you, an HUF has a further classification of ROR and RNOR. So a resident HUF can be further divided into a resident, ordinary resident, and a resident but not ordinary resident. Now how do we decide whether an HUF is a resident, ordinary resident, or resident but not ordinary resident? That's based on the status of the Karta. And by Karta, what do you mean? Karta is the head of the HUF. So if the Karta satisfies the 2 additional conditions of section 6.6, that is a section which taught you about the resident, ordinarily resident conditions and criteria for an individual. That is, if you are a resident in India for 2 out of 10 years, or if you spent 730 days out of the last 7 years. So if that's the case, you become a resident, ordinarily resident, right? We saw this in the first part of our study. So if the Karta satisfies those 2 conditions, then the HUF will become an ROR. But if the Karta does not satisfy those 2 conditions, then the HUF becomes an RNOR. Simple, right? So purely on the basis of control and management, we determine whether an HUF is resident or not. Now, if an HUF is resident, then based on the Karta satisfying conditions of section 6.6, we determine whether the said HUF is ROR or RNOR. So first step is on the basis of control and management. In this basis, we find out whether an HUF is resident or non-resident. Then the next step for the resident HUF is on the basis of Karta satisfying section 6.6 conditions. If satisfied, If satisfied, then the HUF is an ROR. Doesn't satisfy, then the HUF is an RNOR. As simple as that. Yeah? So now you understood how to determine the residential status of an HUF? Pretty simple, right? Now I'll tell you what the specific term of control and management is before we head on to the determination of residential status of the next category of SSCs. So by control and management, what it means is, it is the controlling and directive power. So it is the power to control or direct the HUF. It is the actual power to control and manage and not the mere right to control. Okay, it's the actual power, not the right to control. Fine. Also, by control and management, it refers to the power of managing, controlling, directing the HUF as a whole and not just deciding their day-to-day affairs. Okay. So the place of central control and management is situated where the head, the seat and the directing power is situated. So wherever the head or the seat of the HUF or the directing power is situated is said to be the place of control and management. And if it happens to be at least partly from India, then the HUF is resident. If not, even a part is within India, then the HUF is a non-resident. So that's all for the rules for deciding the residential status of an HUF. So yes, with that we finished the process of determining the residential status of an individual and to an HUF. Now let's go to the remaining categories. The one that we are going to see right next is how to determine the residential status of firm or limited liability partnership, AOP, BOI or local authority. Pretty simple. For all the SSCs from this point onwards, we do not have the ROR, RNOR classification. We just have whether an SSC is resident or non-resident. Alright. Now to determine the residential status of a firm, LLP, AOP, BOI or local authority, we again go to the control and management of the said SSCs. If the control and management is wholly or partly from India, then they are a resident. If the control and management is wholly outside India, then they are a non-resident. So if at least a part is from India, resident. If completely outside India, non-resident. So that's how you decide the resident status of firm, LLP, AOP, BOI and local authority. That is by checking their control and management. Simple, yeah? Control and management here means the same thing as we saw in the last slide. Right. Next, this is a very, very tricky area. There are a lot of terms that we need to know with respect to understanding the residential status of a company. Now all those things that you need to know, all those terms I'll explain right after I give you a basic flow chart. Alright. So for determining the residential status of a company, first we should check whether the company is an Indian company or not. If a company is an Indian company, then for sure that company shall be a resident. But then what is an Indian company? I'll explain to you what an Indian company is right after this flowchart. For now, just understand this. An Indian company is a company registered as per the laws of our country. Alright. Next, the next categorization is wherein a company which has made prescribed arrangements for declaring and paying dividends. You will have a detailed study of this category of companies as well. Just understand, herein we are talking about certain companies who has made certain special categories of arrangements for declaring and paying their dividends. Now, if they have made such arrangements for paying and declaring dividend, they shall also be a resident. So, Indian company and a special category company. Now, besides this, we have another category of companies. And if you're a student preparing for the intermediate level of examinations, you will only find this particular classification and this classification in your study materials. There are not many chances that you will find this particular category of companies. But then, this is applicable. You will see this in your final examinations, and this is applicable as per Income Tax Act, and hence I've included it in our study. Right. Now for this category, that is the final category of other companies, you decide their residential status on the basis of a particular term called place of effective management. Somewhat similar to the same control and management that we previously saw. Alright, I'll give you a detailed study on this term right after the slide. Yeah. So if the place of effective management of a company is within India, then they will be a resident. If the place of effective management is outside India, then that company shall be treated as a non-resident. Fine, that's how we determine the residential status of a company. No ROR, RNOR classification here. So simple. Indian company, resident. Prescribed arrangement for declaring dividend and paying dividend, resident. Other company, POEM. This is in short called as POEM, place of effective management in India, resident. POEM outside India, non-resident. Now I'll explain the specific things that I mentioned here. What an Indian company is, what is the specified arrangements, what is POEM and all. Before I tell you all that, let me first tell you what a company is. So what is a company? A company is an Indian company or any body corporate incorporated under the laws of a foreign country. By Indian company, what I mean is a company registered as per the laws of our country. Or any institution, association or body. Any institution, association or body which is or was accessible or was assessed as a company for any assessment year on or before April 1, 1970. That is, any institution, association or body which is or was assessed or accessible as a company on or before April 1, 1970. That is, after April 1, 1970, they might not have the status of being a company. But if they were assessed or were accessible as a company before April 1st, 1970, they will be treated as a company in a country. Fine. Now the final point. An institution, association or body, whether incorporated or not, and whether Indian or non-Indian, which is declared by general or special order of the CBDT to be a company. That is, an institution, association or body, incorporated or not, Indian or not, but CBDT says, the Authority for Direct Taxes says, it is to be treated as a company. Alright, so it can be an institution, association or a body which is incorporated or not, Indian or not, but CBDT says you are to be treated as a company. Alright, fine. So now you know what a company is. Next, let's check what an Indian company is. Alright, now as I said previously, Indian company is nothing but a company registered and set up as per the laws of our country. Now that is a generic explanation. As professionals, we need to know more. So let's see what an Indian company is. An Indian company means a company formed and registered under the Companies Act 1956 and includes. So this is the same thing that we were discussing till now. So company formed and registered as per the Companies Act, but also includes A company formed and registered under any law relating to companies formerly in force in any part of India other than Jammu and Kashmir and Union Territories. Alright, so a company which was set up by a law which was in force before Companies Act 1956. Alright, which is located in any state other than Jammu and Kashmir or the Union Territories. A company formed and registered under any law for the time being in force in the state of Jammu and Kashmir. Alright, see, the constitution has given certain considerations for the state of Jammu and Kashmir, and not all laws are applicable pan-India. Certain laws are specially applicable for Jammu and Kashmir, and that's why we have special treatment here. So as per the laws applicable for Jammu and Kashmir, any company formed there shall be treated as an Indian company. It doesn't have to be Indian Companies Act 1956. Next, any company formed and registered under any law for the time being in force in the Union Territories of Dadra and Nagar Haveli, Goa, Daman and Diu and Pondicherry. So just like we saw in the previous point, for Jammu and Kashmir, herein we have set out certain Union Territories, and for these Union Territories, if any company is formed and registered under the law which is applicable to them, they shall be treated as a company. Next, a corporation established under a central, state or provincial act. Any corporation set up as per the central, state or provincial act. And finally, any institution, association or body which is declared by the CBDT to be a company under section 217, just how we saw previously. If the CBDT says this institution, association or body is to be considered as Indian company, then they will be an Indian company. Alright, simple. Also, please do keep in mind, you do not have to study all this by heart. Just go by logic. I'm pretty sure that after this explanation that I just made of all these points, now you know what an Indian company is. At least you know how to explain to a layman as to what an Indian company is. Yeah? Perfect. Now, above all this, In all the aforesaid cases, a company, corporation, institution, association or body will be treated as an Indian company only if its registered office or principal office, whichever is applicable, is in India. So for all these points from A to E, the registered or principal office has to be in India. So now you know what an Indian company is, right? Also, please do note, you might not find this in your study materials, but then I just want you guys to have information, knowledge as to what an Indian company is. So yes, now we learned what an Indian company is. So we know an Indian company is always a resident, right? The next category that we saw was a category wherein a company has made certain arrangements for declaring and payment of dividends, right? Let's check what those arrangements are. So the prescribed arrangements for declaration and payments of dividends within India is as per Rule 7 of the income tax rules. Sorry, not Rule 7, Rule 27. So yeah, let's see what Rule 27 tells us. Rule 27 tells us that the arrangements to be made by a company for declaration and payments of dividends, including dividends on preference share within India, shall be as follows. Number 1, the share register of the company for all shareholders shall be regularly maintained at the principal place of business within India. Alright, share register of all shareholders maintained regularly in India. That is the first condition. That is the first condition for the arrangement. Second, the general meeting for passing the accounts of the previous year relevant to the assessment year and for declaring any dividends in respect thereof shall be held only at a place within India. That is the annual general meeting of a company, wherein the accounts are finalized and the decision for declaring dividends are made, is done in India. So this general meeting is conducted in India. That's it. Point number 3. The dividends declared, if any, shall be payable. Yeah, this is key. Shall be payable only within to India to all shareholders. That is, no dividend declared shall be payable outside India to shareholders. So what all are the things that has to be in India? Number 1, share register. Number 2, the general meeting. Number 3, the payment. Alright. Now, if these 3 things are as per the points described under Rule 27, then the company shall be treated as a resident company. So if a resident company has made such arrangements for paying or declaring dividend, then that company shall be treated as a resident company. Clear? And the last point was regarding certain other categories of companies wherein we decided they are resident based on their place of effective management. Now, what is place of effective management? Place of effective management is nothing but a place where key managerial and commercial decisions are made which are necessary for the conduct of the business entity as a whole. Alright, so the place where key management decisions, key commercial decisions, which is necessary for running the business as a whole. That is not mere day-to-day decisions, but the whole large-scale, long-term decisions are made. So that's the place of effective management. Also, you need to determine POEM on a yearly basis, because a company can have place of effective management to be India for 1 year, and for the next year it might not necessarily be India, because if the board or the key managerial decision makers move out of India, then India will no longer remain as a POEM. Alright, so this is to be determined on a yearly basis. And if POEM is in India, then resident. Outside India, not India, then non-resident. So yes, that's it for this part of the study, wherein we discussed about the determination of residential status of the HUF, which is based on control and management, and Karta satisfying 6.6. Then we went to firms, LLPs, AOP, BOI, and local authority, wherein it's purely based on control and management. Then we saw companies, which we just discussed now. So by that, I hope you are very, very clear with the concept of the determination of residential status of all these said parties. And in case if you come across any other SSC, an SSC that does not, any person that does not fall any of the classifications that I just said, then to determine their residential status, all you have to check is their control and manage it. If it's wholly or partly from India, then they are resident. If it's wholly outside India, non-resident. Clear? So with that said, I'm winding up this video. I'm hoping you got a really good understanding of this whole concept of determining residential status. From the next video, that is a part 3 of the study, we will see the concept of scope of income and the incidence of tax with respect to an income based on its scope and the residential status of an SSC. So that's all for now. See you in my next video. Till then, take care, stay safe, and goodbye.